Gold. Just the word evokes images of wealth, power, and empires. It has been a symbol of opulence and grandeur throughout history. For millennia, this gleaming metal has captivated civilizations, fueling wars and underpinning economies. From the ancient Egyptians to the Roman Empire, gold has been at the heart of human endeavors. But what is it about gold that has made it so valuable for so long? Its unique properties have always set it apart. Why, in our modern world of digital transactions and cryptocurrencies, does gold retain its luster? Despite technological advancements, gold remains a cornerstone of financial security. The answer lies partly in our history. Gold has been intertwined with human progress and development. Gold's journey as money began not in the halls of power but in the everyday transactions of ordinary people. It was a trusted medium of exchange long before modern banking systems. Its inherent properties, its beauty, durability, and scarcity made it a natural choice for a medium of exchange. These qualities ensured that gold was universally accepted and valued. Unlike perishable goods or easily counterfeited tokens, gold held its value across time and borders. It was a reliable store of wealth that could be passed down through generations. This intrinsic value is central to understanding gold's enduring appeal. It is not just a commodity, it is a symbol of stability and trust. It is not simply a shiny metal, it is a store of value, a hedge against uncertainty, and a symbol of enduring wealth. Gold's allure is timeless, transcending cultures and eras. In an increasingly complex and unpredictable world, gold offers a sense of security, a tangible link to the past, and a potential safeguard for the future. Its legacy continues to shine brightly, reminding us of its unparalleled significance in human history. Long before the advent of central banks and the complex financial systems we know today, gold served as the de facto money for much of the world. It was a universal standard, a symbol of wealth and stability. Its scarcity ensured that it couldn't be easily manipulated, making it a reliable store of value. Meanwhile, its durability meant it could be traded countless times without degrading, maintaining its value over centuries. A gold coin from ancient Rome, for instance, would still hold its weight in gold today, a testament to its enduring worth. This inherent value made gold universally accepted across different cultures and civilizations. Merchants from different lands, speaking different languages, could agree on the value of a gold coin even if they trusted nothing else. This common ground facilitated trade and fostered economic growth. Gold's role in trade was pivotal, enabling the exchange of goods and services on a global scale, connecting distant economies. But gold's role as money wasn't without its challenges. Its physical properties, while beneficial in some ways, also posed significant drawbacks. Its weight made it impractical for large transactions, requiring significant effort to transport and secure. Additionally, its very scarcity could stifle economic growth, as the limited supply of gold restricted the amount of money in circulation. As economies expanded and trade flourished, the limitations of a purely gold-based monetary system became increasingly apparent. This led to the development of more flexible and scalable financial systems, paving the way for the modern economies we have today. The mid-20th century witnessed a seismic shift in the global monetary order. World War II had ravaged economies and discredited existing systems. A new framework was needed, one that could foster stability and facilitate post-war recovery. This framework emerged from the Bretton Woods Agreement of 1944. Under this agreement, the United States dollar was pegged to gold at a fixed rate of $35 per ounce. Other countries then pegged their currencies to the dollar, creating a system of fixed exchange rates with the dollar at its center. This agreement effectively established the dollar as the world's reserve currency, cementing America's post-war economic dominance. The dollar became the primary currency for international trade and finance, giving the United States significant influence over the global economy. The Bretton Woods system, while initially successful, faced growing strains in the 1960s. Increasing U.S. government spending, fueled in part by the Vietnam War, led to a surge in the supply of dollars, putting pressure on the gold reserves backing the currency. In 1971, President Richard Nixon made the momentous decision to unlink the dollar from gold, effectively ending the Bretton Woods system. This move, known as the Nixon shock, ushered in the era of floating exchange rates where currency values are determined by market forces. This decision had profound implications for the global monetary system. It removed the constraint of gold on monetary policy, allowing central banks greater flexibility in managing their economies. However, it also introduced greater volatility into the global financial system, as currency values were no longer anchored to a fixed asset. Section 5. The dollar's reign, why it still matters. Despite no longer being tied to gold, the US dollar has retained its status as the world's leading reserve currency. Several factors contribute to its enduring dominance. First, the sheer size and strength of the US economy underpin the dollar's value. The US boasts the world's largest economy and deepest financial markets, making the USD a stable and liquid currency for international transactions. Second, the USD benefits from a network effect. Because it is already so widely used, it becomes the default choice for many international transactions. This reinforces its dominance and makes it difficult for other currencies to challenge its position. Section 6. Gold, a safe haven in uncertain times. Even though the gold standard is a relic of the past, its legacy continues to influence modern economies. Gold continues to play a significant role in the modern monetary system, serving as a cornerstone of financial stability. Central banks around the world hold substantial gold reserves, recognizing its enduring value and its ability to act as a hedge against economic uncertainty. These reserves are not just symbolic, they are a critical part of national financial strategies, providing a buffer in times of crisis. For investors, gold often serves as a safe haven asset, a reliable store of value in turbulent times. During times of economic turmoil, geopolitical instability, or high inflation, investors tend to flock to gold, driving up its price. This surge in demand is a testament to gold's perceived stability and reliability. This is because gold is perceived as a tangible asset with intrinsic value, something that cannot be devalued by government policies or market fluctuations. Unlike paper currency or digital assets, gold's value is not subject to the whims of political decisions or economic policies. While gold may no longer be the foundation of the global monetary system, it remains a potent symbol of wealth and security. Its allure is timeless, attracting both seasoned investors and those new to the market. Its historical significance, combined with its unique properties, ensures that gold will continue to captivate investors and influence financial markets for years to come. As we navigate through uncertain times, gold stands as a beacon of stability, a testament to its enduring legacy and unmatched value. Section 7. Understanding the fiat money system. We now live in a world of fiat money. This means that our currencies are not backed by any physical commodity like gold, but by the trust and confidence we place in the issuing governments. Central banks play a crucial role in managing these fiat currencies. They control the money supply through monetary policy, setting interest rates and influencing the amount of money in circulation. This allows them to stimulate economic growth, control inflation, and manage employment levels. Another key aspect of the modern monetary system is fractional reserve banking. This system allows banks to lend out a portion of their deposits, creating new money in the process. While this can fuel economic growth, it also introduces a degree of systemic risk, as banks are inherently vulnerable to runs if depositors lose confidence. Section 8. Challenges to the dollar's supremacy. The US dollar, while still dominant, faces growing challenges to its global supremacy. The rise of emerging economies such as China is shifting the balance of economic power, potentially paving the way for alternative reserve currencies. Furthermore, digital currencies like Bitcoin are gaining traction, offering a decentralized and potentially more efficient alternative to traditional fiat currencies. While still in their early stages of development, cryptocurrencies have the potential to disrupt the existing monetary system and challenge the dollar's dominance. Geopolitical tensions and the weaponization of the dollar through sanctions also pose risks to its status. As the US increasingly uses its currency as a tool of foreign policy, other countries may seek to reduce their reliance on the dollar, potentially undermining its role as the leading reserve currency. Section 9. Navigating the monetary maze. In today's complex and ever-changing monetary system, it's more important than ever for individuals to understand the forces at play. Here are a few key takeaways. Diversify your assets. Don't put all your eggs in one basket. Consider holding a mix of assets, including stocks, bonds, real estate, and precious metals like gold. Stay informed. Keep abreast of economic trends, geopolitical events, and monetary policy decisions. These factors can all impact the value of your investments. Think long-term. Avoid making investment decisions based on short-term market fluctuations. Focus on building a diversified portfolio that aligns with your long-term financial goals. Navigating the monetary maze can seem daunting, but by staying informed, diversifying your assets, and taking a long-term perspective, you can position yourself to weather economic storms and achieve your financial aspirations.